Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it looks like a dull kind of a day on the markets because it's a 37-point downtick for the Nifty. 22,426 is where it is been trading at around. It's been a very narrow band of trade right from morning all the way up till now. And now the Nifty Bank has also slipped into the red. It was just managing to eke out some positive gains in the morning trading action, but now it's looking about 63 points lower in trade at 47,511. Sectorally, things are looking brighter. The Nifty Consumer Durable Index that shot up in the early part of the trading session has maintained its gaining streak. So it's up about 1.7% higher in trade. Along with it, it's the metals that have picked up pace 1.3% higher in trade right now. So that space is shining bright. The mid and the small caps are definitely doing better than the benchmark indices, and therefore you see green ticks on both of them. In fact, there's about a half odd percent gain coming in on the, over a percent kind of gains coming in on the mid caps, and the small caps are now up by 1.3% odd at the day's high level as well. So they have been doing pretty well. Along with it, realty space, oil and gas, autos are the other spaces that are still hovering in the green zone and with positive gains. It's the IT pack that's not been participating right from the morning trade. So that space is still lower in trade. And when we talk about the healthcare space, that is also lagging behind in trading session today. Apart from this, the private banks are something that's still been a laggard space all through this day as well. The top movers on the Nifty, you do have Tata Consumer Products, that's 4% high in trade. M&M, BPCL, Bajaj Auto, Adani Post, Divis Laboratories, some of the movers as far as the markets are concerned. But time to welcome our guest on the show. Sunil Shah now joins in. He's the fund manager of SRE PMS. Sunil, very good afternoon and good to have you with us on Business Today Television. Do tell us, as we begin this new fiscal year, where is it that you do believe that the markets are headed from here on? Because of course a lot of events lined up. It's the RBI policy first, then the earnings season will get kick-started, and of course we'll be in the thick of election scene as far as starting April 19th is concerned. So a lot more happening. How are you really looking at maneuvering fresh money in the markets now?
Yeah, thanks for having me on the show. Clearly, there is a tug of war going on in the markets. It's liquidity on the one side, which is, supporting the market, and it is the concern of higher valuation, which is restricting the upside. So the tug of war is there between the two elements which drive the markets over a period of time. Having stated that, I think market is really building themselves uh, in terms of expectation of continuity of the government. So question that comes in the mind is, in case the government really holds on, what really is the action that could be expected? And that's where, the investment call over a long period of time can be taken. So there are areas and there are opportunities which are there. I think if at all the government is there in power, clearly the pace of reforms will pick up, and there is a sweet spot as it is in the world. So we'll see flows from the international market also getting diverted towards India once the conviction is there about continuity of reforms, pace of reforms, and more to do with the public sector space. So I think that's one pocket area which I think will play out over a period of time as well as in the long term. So that's the one which we can keep a watch on over a period of time. That's the way we would like to play the market right now. Yeah, sure.
Okay. The current government has had a lot of, key focus areas, especially when we talk about infrastructure. That's been big. Manufacturing is something that the government has constantly focused on as well. Of late, we've actually seen massive investment has been done in the road projects, even in the power space as well. Where next do you believe, in case the same government comes to power, where are they next going to focus their energies on, and what kind of opportunities, therefore, the fresh and new investors should be keeping an eye out on?
Yeah, so clearly, if we try to read between the lines, the focus area of government has been on the infrastructure side. And as you stated, a lot of things have already happened on the road front, railways ongoing, power also, a lot of reforms have actually happened now. I think the next leg of growth could come in the ports and the airport pockets. So airports is one where also they've clearly stated out that almost about 140 airports are currently operational in the country. And in the next 6 to 7 years, they want to scale it up from 140 to 250. So we'll see massive investments come in the airport space, and a lot of tier two, tier three cities will also get connected in this opportunity of expansion of airports. So I think the service provider, that's like the airlines industry, within which Indigo could be one which could really be beneficiary out of all of these. The company is on a strong foothold. Indigo, as they call it in the markets, Interglobe Aviation. They have more than 60% market share. So almost about 15 crore domestic flyers were there last year, out of which Indigo had about 9 crore passengers uh, purely flying on their flights. And this market share is still likely to continue because more and more airplanes are getting joined in the fleet of Indigo. So we'll see more airports, we'll see more planes, and Indigo with a 60% plus market share could be one big beneficiary. From the market standpoint, there has been a promoter selling in Interglobe, and that also, like the individual promoter, is now limited to about 7% of stake in the company. So that is also going to give one big thumbs up that the selling pressure could abate over a period of time. So I think all said and done, Interglobe Aviation, that's Indigo, could be one beneficiary on the airport side.
Hmm.
On the port side, I think JSW Infra can be another play. JSW Infra has got listed. They have more than 10 ports or terminals under their control right now. And if we see the trend that if a quantum of cargo is shipped through the roads, the cost is almost 135% more than if it is shipped through the waterways. So
Hmm.
next growth from government will come in terms of developing the waterways. So I think GSW Infra can be one play which investors keep a watch on. That could be play out very well, Shakshi.
Okay, airports and ports, and within that, Indigo and JSW Infra could be clear winners of the focus that the government could be having if the same government comes to power over the next few years. So that's something that you can keep an eye out on. The other major space is defense, where we've actually seen a lot of re-rating take place. Stellar growth over the last 6-8 months or so. Many stocks have turned multi-baggers from this space in a very short period of time as well. But the kind of newer projects being announced, the kind of focus that the government really has, do you still feel that this is a theme that could continue to sustain its uptrend going forward? And in case one has to still, invest afresh, where exactly should one be putting in fresh money in the defense space?
Yeah, Sakshi, so it's going to be very company specific. We're going to see each company on its merit in the defense pocket because a lot of run-up has already happened. One company is GRSC, Garden Reach Shipbuilders. The company is currently sitting on an order book of 23,500 crores.
Mm-hmm.
And in the month of June, July, fresh tenders are going to open up worth about 36,000 crores.
Hmm.
That's a huge amount of money. And I think GRSC is well positioned to take a part of that order, roughly about 22,500 crores or so. So we could see a complete leg up because it is going to be almost close to 95% of its current order book position.
Hmm.
So I think in that sense, a cash rich, a company which has delivered on all fronts with the government, and Navy ships are very important to control the geographical boundaries that we have with sea on three sides. So all that makes GRSC as one of the great formidable players with good growth prospects in the years to come. So in the defense pocket, I think GRSC is one that investors can really watch out from the long term.
Okay, GRSE, it has been in an uptrend. The last 1 month's move will suggest to you the stock has moved up about 2%, but over the last 1 year odd is where the maximum part of move has happened. 82% odd is what the stock has moved over the last 1 year's perspective. And although the things have been choppy in between as well, but clearly the stock seems to be looking positively as far as newer order flows come in, and that could augur well for the company from here on as well. Any particular upside that you can share with us, Mr. Shah, on GRSE that one can expect if somebody were to invest in it afresh right now?
Yeah, so I think more than the percentage upside because this year itself, the press release of the company has just come day before,
Hmm.
wherein they stated almost about 3,400 crores of revenue will be done in FY24 itself.
Hmm.
The guidance from the company is 25% growth for the next 2 years. So I think it would be safe to assume that a 25% year-on-year growth in the target price or in the price in the market can also be achieved in the 2 years. I think that would be a fair assumption.
Okay, fair enough. So that's a point taken as far as DRAC is concerned. You know, we've so far discussed about the sectors that you may think that will continue to garner investors' attention as well as continue to give opportunities to investors going forward from here. But I want to also talk about sectors that have actually underperformed. Say private banking, for example, the large cap private banks like HDFC Bank have actually given investors a very hard time, not just in the last 1 year, but last 3 to 4 years in a row. There has been no movement, so to speak, as far as HDFC Bank is concerned. How would you really advise investors to really look at HDFC Bank now? Do you really get confidence that the stock may be coming out of its long underperforming cycle, will be now looking at performing? Is this a good enough time? Does it give you more comfort in terms of valuations or prices are concerned?
Yeah, great, Shakshi. So I think we need to see the history of various stocks in the market. There have been long periods of time when stocks like Reliance, ITC, Hindustan Lever have not delivered return to investors for like almost 5 to 8 years in a row. Then the spark happens because something happens in the company which actually gives a substantial profit growth. I think in case of HDFC Bank, the concern that the market had is in terms of the credit deposit ratio, wherein it was not really aligned in terms of the credit that the company has versus the deposits. And if you see the event which has happened in the month of February, company, that's HDFC Bank, has raised $750 million as a structured bond issue from the international market. So this really gives put to rest the concern on the credit growth for the company. Now, domestically raising money is really a very costly affair because of the competitive scenario between banks. So HDFC Bank has gone offshore and raised money from the international market at very, very competitive rates. And given the credibility and pedigree of HDFC Bank, raising funds from the international market will never be a challenge for this kind of a company. So I think over the next 3 to 6 months, this ratio of imbalance in the credit deposit ratio for HDFC Bank will be behind us. And that, to my mind, will be a trigger in terms of the company gaining its lost glory or the last 3 years of almost no return. So I agree, Shakshi, that at this point, for a long-term investor, it's a great time to accumulate a great stock because it's almost at the low end of valuation for like 10. So that really gives a good cushion, good comfort. And I think the trigger is in terms of raising funds from the international market. So keep a watch on that event and you can, build the position. So I think that's the way we would try to look at HDFC Bank at this point of time, Shakshi.
Okay, fair enough. Well, Mr. Shah, just stay on with us. Time to welcome our other guest on the panel as well. Osho Krishnan now joins in. He's the senior research analyst, both technical and derivatives from Angel One. Osho, good afternoon. Welcome to Business Today Television. Well, season's greetings for the new fiscal year starting. We did have a big bang start for the benchmark index, but things are again back to, whether the markets and the Nifty will be able to sustain above 22,500 and what's the kind of strength which is underlying on the index or not. Tell us at the beginning of this new fiscal, new series and the new quarter, what's the sense that you're getting between Nifty and Nifty Bank, and where would you advise investors to put their money?
Very good afternoon, Sakshi. First of all, thank you for having me at your show. Now, coming to the query on Nifty first, see, Nifty is having a very strong start for the current financial year. We have seen a very cheerful start for the current financial year, approximately hovering near the zone of 22,500. But from derivatives data, 22,500 has the most attraction from the call writers. So that means that is a very strong resistance for the time being. But the time we witness a strong closer above 22,500, then I'm expecting a very strong upsurge of approximately 500 odd points in the coming period. So just wait and watch for a time of another 50-60 point of rally on a closing basis. And after that, there can be a strong rally of 500 points in the coming period. On the lower end, we have seen strong put writers positions around 22,300. So that means buy on declines is the perfect approach or strategy that one can have. 22,300 should be the buying range. On the higher end, 22,500 should be the booking range. and one should wait for a proper breakout. Now coming to Bank Nifty, for Bank Nifty, it is looking very positive. Specifically, the PSU banks are looking positive as of now. So I'm
Okay.
expecting that in Bank Nifty, 47,200, which was the previous resistance, should be now acting as a very strong support zone. And on the higher end, 47,800 and 48,000 zone should be acting as the immediate resistance.
Fair enough. So that's as far as the Nifty and the Nifty Bank is concerned. Osho, your two stock ideas that you're going big on today.
First of all, the first recommendation is in Coromandel. Coromandel have seen a very strong breakout, consolidation breakout. So approximately hovering around the zone of 1130. So one should try to accumulate the counter at the current zone. 1090 should be kept as the stop loss. And in the coming period, I am expecting a target of 1170 to 1180. The other counter, which is having a conservative approach but having a very strong bullish pattern, is Birla Soft. Birla Soft is hovering around 765. One should try to accumulate the levels at current levels, keeping a stop loss of 740 for the target of approximately 800.
Okay, so those are those stock ideas that you're going big on right now. But let's get you some of the stocks that are actually buzzing in the FNO space. Let's get your word there. Z Entertainment Enterprises now 11.5% higher. Now we do know, Osho, that it's been a very, very volatile stock of the past with the kind of developments on the news front that we have seen. But stock has inched up with a sharp spike towards the end of the session at the day's high level now, hovering around 153.7. Is there still a space that you would warrant a lot of caution, or do you think that purely on technical basis that this trade can be taken?
See, overall, this counter has seen a very strong breakdown from the zone of near about 168, 170 odd levels. And in the recent two trading sessions, there has been a strong recoup or resurgence that can be seen. But I am not very much bullish until it crosses the zone of 170 on a decisive manner. Two things are there. One is the weekly breakdown zone. The other one is 100-day SMA followed by the bearish gap on the higher end. So approximately a closer above 170.75 can give a strong boost to the counter for immediate target of 210. As of now, I won't be very much aggressive and will be jumping into the moving rally.
Okay. The other space that's really taking a lot of attention is the consumer durables. After a long haul, we're actually seeing the entire space a buzz with action. So stocks like Dixon Technologies are up 4% higher in trade. Kajaria Ceramics is up 3.7%. Crompton Greaves is up 3.5%. Voltas is up 3.4%. Blue Star, Whirlpool, Amber Enterprises, Havells, you name it. It's a string of stocks that are actually buzzing in trade right now. What is behind this kind of a move? Is it the seasonality factor that's kicking in now with the summers, on setting, as well as the Met Department now talking about heat wave issues that could be coming in, and therefore some kind of a demand uptick that could be fueling in some spark into these particular stocks? Is that something that you spot, or is there something changing technically for all of these stocks too?
See, basically, as you have said, these are all the fundamental aspect that we have to look upon because coming the seasonal changes, so majority consumption will be happening in major of these companies like Voltas, Havells. So these companies have started gaining traction for the investor point of view also. But from technical point of view, if I have to say, then yes, this counter have all these counters have seen strong traction from the past two trading weeks. So I'm expecting that from here onwards, the primary trend should be continued for the coming one quarter or 1 to 2 trading months is as of now. But overall, the trend remains very bullish, and in between there can be some in between hiccups or profit booking can be seen, but overall the trend remains intact for the bulls. So the counter which is looking very positive to me is Havells. Near about 1540 is the zone where it is hovering, and it has resurged from the 50-day exponential moving average. So I'm expecting in the short run it can move towards the zone of 1580 followed by 1600 on immediate basis, and the time it breaches the zone of 1600 there can be another 80 to 100 point of rally can be seen.
Okay, let's actually get Mr. Sunisha also into the conversation. Sunil, how are you looking at the consumer durable space as of now? Is this a space that interests you? Should one really look at this theme over the next 3 to 5 months?
Yeah, Shakshi, clearly, these companies are really positioned for the entire upgradation of the Indian spending nature. as a country also, as we evolve in terms of the per capita spend, air conditioning is no longer going to be a luxury product. The way in which it happened for TV, consumer things like refrigerators, etc. in the past, all these products and the companies, all these companies have got their marketing reach all throughout the country. So in terms of leveraging for future growth, they just need to pump in one more product in the system and the revenue numbers come in, which
Hmm.
flows to the bottom line. So operating leverage kicks in. The marketing spends are very, very high for all these companies. They are really competitive. They establish themselves over a long period of time. So I think the sector really can do very well, and you just need to be choosy in terms of what you're going to pick up.
Okay, got that. Let's also look at some of the other movers at this point in time. It's the mid and the small caps where all the action is brewing. You can actually see both these indices now climb to the day's high level, and strong action unfolding over here. Mr. Sunil Shah, first to you, and then I will take this up with Osho as well. Just about few weeks back, the conversation around the mid and the small caps was the space is too overheated. There is a bubble. There was also an indication from SEBI that this space is looking frothy at this point in time, and therefore the mutual funds were advised to take action to protect the investors which were putting in fresh money in the lump sum space as far as the mid and the small caps are concerned. Of course, some bit of consolidation, some correction happened, and the stocks are again picking up pace again. What is your own sense as far as this broader market space is concerned? And would you still believe there is some, at least if not all the steam left in this space?
Yeah, Shakshi, so there is one ratio which I track at my level wherein I compare the movement of the small cap index versus the Nifty. And I have looked at this trend for the last 20 years or so. Whenever the small cap index trades at a premium of 65% over the large cap index or Nifty, then the bubble kind of a situation is formed. And steps need to be taken, and you need to shift from your mid and small cap portfolio to the large cap space. As I speak, or before the stress tests happened by the regulators for mutual funds, that ratio, which generally peaks at 65%, was actually quoting at 85% premium. So a lot of fraud was already built into many, many companies, and the regulators taken the right step in terms of warning the investors or people who are going berserk in the market. As we speak, that ratio has corrected from 85% premium to about 75% premium also. So, which means there is rectification, modification, or improvement in the market. But are we still out of the bubble territory? Maybe the answer is still no. So, what should an investor ideally do? The investors can look at opportunities in the large cap space, companies which have got great growth potential. A few of the names that we discussed earlier, the likes of HDFC Bank or the likes of Indigo Aviation, they are large cap companies with credible growth opportunity visible, or maybe a mid cap company like a Garden Reach that we discussed. So if
Yeah.
investors become more aware and position the portfolio in that space of being in the mid to large cap, but a quality company, I think then they need not worry about the corrections in the market as long as the picking is rightly done. But if the investment is more towards the SME pack or companies without inherent strength of fundamentals, then the cause of concern always remains. So it's about what you do, which is more important in this market at this point. Sure.
Okay, fair enough, fair enough. Let's again look at some of the spaces that are buzzing in trade from the FNO action again. Of course, from morning we've discussed a lot of Aditya Birla Fashion Retail, which I will come to Mr. Shah again for his view in a bit. It's Bharat Electronics from the defense pack that's moving up 5% higher in trade. From the metal pack, it's Steel Authority of India and Vedanta, JSPL, all of these that are moving up pretty smartly. Birlasoft was mentioned by Osho, that also is now up by 4.3% higher in trade. You also have from the real estate pack Godrej Properties that's been inching up higher, 4.36% higher in trade as of now. And it's also the cement pack that is looking interesting with stocks like ACC, Dalmia Bharat also picking up some pace at this point in time. What looks interesting to you from the FNO space that you can highlight, Osho, at this point?
See, firstly, the cement counter, which you have said, have seen a very strong traction in the last two to three trading sessions. So,
Yeah.
majorly, major of the counters like ACC, Ambuja Cement, these counters have seen a very strong breakout also. So I'm expecting that from here onwards, there can be another 1 to 2 days of rally that can be continued in cement counter. So one should be very much selective because on the technical front, we are just reaching the overbought trajectory in the cement space. But as of now, one should not overcome or one should not overgo the momentum. So one should definitely try to ride the momentum. And as of now, I'm expecting that the steam is still left in cement counter. So Ambuja Cements and ACC is looking very positive for another 1 to 2 trading sessions.
Hmm. Okay, got that. The other space that is garnering some more attention as far as the markets are concerned is a lot of move that you can actually spot in the PSU pack. So be it the oil and gas names like Oil India, MRPL, ONGC, IOC, BPCL, HPCL, the downstream companies. There is a lot of a buzz, buzz happening in the power space as well. You also have stocks like PFC, REC, NTPC, Coal India. You also have Adani Power, Tata Power. These are the kind of stocks that are buzzing in trade as well. And then you have some stocks from the railway pack also coming up. So IRCTC is up 3.5% right now. So some bit of action over there. Osho, anything from the PSU pack that looks positive as of now? Which stocks would you like to track?
See, in from the PSU space, there is a lot of counters which are looking very positive. Firstly, I will be focusing more on the PSU banks. So coming to PSU banks, the counters which are looking very constantly in a bullish phase are SBI and Canara Bank. Both the counters are looking very positive. Firstly, if I have to tell you about the technical aspect of SBI, then it has seen a very strong movement in the last couple of trading sessions, hovering approximately around 765, and with the development, I am expecting 780.82 can be tested for SBI. The other counter is Canara Bank. Canara Bank again have been tracking strong tractions and is hovering near the 52-week high. So I'm expecting the time it breaches the zone of 600, then from there onwards another 20 point of rally that can be seen on immediate basis for Canara Bank. So these two are from the banking space. From other counters also, like Coal India is also looking very positive to me. If I have to tell you about the positional basis, then Coal India can see a very good traction. On the
Mm-hmm.
higher end, I am expecting nearly 458 to 460 as the immediate resistance or as a immediate target for short-term traders. It is hovering near above the 20-day exponential moving average from the past three trading sessions, and it has been in a very strong bullish setup. So I'm expecting that another approximately 15 to 20 point of a move can be seen in Coal India also.
Okay, fair enough. Mr. Shah, I was going to come to you on Aditya Birla Fashion Retail. The stock, of course, has reacted to the news flow of the vertical demerger that the company has talked about of Madura Lifestyle and retail. What kind of value unlocking do you really see for the existing shareholders and for potential investors looking for this as an opportunity? What would you advise?
Yeah, many a times, the demerger which happens does not really kind of result into value creation for the investors. Now, this
Hmm.
coming from stable from the Birla group of companies will be more of minority investor friendly as well. We'll have to really see the ratio in which this split happens. Having stated that, I think the underlying strength of the business itself is robust and will do well. Having stated that the competitive scenario is very, very high, so for me, if I'm looking at an aspirational spend of the Indian consumers, I would still like to play the other pockets of the electronic segment rather than get into this fashion aspects about clothing, etc. So for
Hmm.
me, the other opportunities could give higher and better returns to the investors in comparison to the garment and this fashion swag from this stable right now. So we will look at other pockets than this one for sure.
Okay, well, time to thank you, Mr. Shah, for being with us. Many thanks, and of course, for taking the time out. Truly appreciate your presence on Business Today. Here's hoping we can get you back on the show very soon to discuss more on markets. Meanwhile, viewers, we will continue our discussion with Osho. Osho, what next is looking attractive to you? It's 319 right now. Would you give us any BTST, STBT trades?
The first counter which is looking very strong and has given a breakout on the technical time frame is Reddington. It is hovering
Okay.
near the zone of 221 and has seen a very strong breakout with a strong number of volumes. So I'm expecting that this counter has the potential to clock another 4 to 5% for the upcoming day. So one should definitely try to gauge the momentum in Reddington, keeping a strict stop loss of 210, and the immediate target that one can expect as a BTST should be of 232 followed by 235. So this is one of the counter which is looking very positive. The other counter which I am having a bullish bet, it's not for BTST but for over a period of time, let's say 2 to 3 trading sessions, I am expecting a good move in AU Bank also. So AU Bank has seen a very strong reversal from very strong support zone historically. 550, 560 has been a very strong support zone. So I'm expecting in the coming trading sessions, the time it surpasses the zone of 600, 40 point of move can be seen in this counter. So one should definitely keep this counter in their radar. The time it crosses 600, it has the potential to test the zone of 640, 45 within 2 to 3 trading sessions.
Okay, well, fair enough. So we'll keep an eye out on these as well. Apart from this, what's all is looking attractive at this point in time? Let's take your view on the mid and the small cap space, Osho. Anything that looks attractive from the small cap space, particularly? There are a whole host of stocks that are actually doing well. It's Tanla platforms that's doing very well today, 10-11% upside. NCC, CAMS, data patterns. You did talk about Reddington. Ujjivan Small Finance Bank, Tejas Networks. There is a lot of action really happening in this space. Any particular stocks that you believe can continue to move up higher?
Firstly, the counter which you have named CAMS is looking very positive. It has seen a very strong trading volume for today's session and is hovering near the zone of 3200, 3180, 3200 odd levels. So I'm expecting with the setup that it has made, it has given a strong breakout above the zone of 3150. So in the next 10 minutes, I'm expecting it will be having a closer above 3150. So there can be a strong follow-up buying that can be seen. So approximately 32, 40, 45 should be seen as the first target as a BTST kind of a scenario. And above that, even 3280 can be seen in this counter.
Okay, CAMS looks extremely positive as of now, but there is a stellar action really going around as far as the mid and the small cap space is concerned. Let's do some stock spotting as far as the mid cap space is also concerned as of now. The space which is a buzz is SJVN. We were talking about the power space, and that stock's come back in action, 5.5% higher in trade. JSW Energy is up and about in trade as of now. We also have names like Mankind Pharma that's back in action from the pharma space today. Then you have Torrent Power, of course, power space a buzz. Anything from the power space that you look at positively right now, Osho?
See, firstly, Adani company is looking very positive. So Adani Power is hovering near its lifetime high zone. So I'm expecting that it is on the verge of giving a breakout, but again, 600 being the psychological mark, that can be seen as the first hurdle or target for the time being. But overall, looking at the 3 consecutive patterns, candlestick patterns that which it has made and hovering near the lifetime high levels, I'm expecting the time it crosses 600 zone, there can be another 25 to 30 point of movement that can be seen. So from power, Adani Power is looking very positive. One should definitely try to gauge the momentum in this counter, followed by Torrent Pharma, Torrent Power also, because Torrent Power also has given a very strong breakout in today's session. So I'm expecting it is having a kind of a flat pattern breakout. So immediately 1480 to 1500 could be seen as the immediate target. But looking at the overall pattern, it has the potential to test 1535 to 1540 odd level.
Okay, fair enough. So those are the stocks that you need to keep an eye out on as far as the power space is also concerned. Is railway a space that you're looking at again? Osho, in terms of technical charts today, IRCTC has come back in action. It's trading above 1,000 levels again. Of course, we were looking at RVNL really doing very well over the last couple of trading sessions as well. What looks positive now?
The IRCTC has already given a breakout in last trading session, so I was expecting that there can be a strong move for the day. So 1000 was my target for IRCTC. So it has already been achieved. I will be waiting for some kind of correction or profit booking in this counter. Although it has given a consolidation breakout, so there is the very strong primary uptrend associated to it. Any dip towards the zone of 960, 970 should again attract buyers for immediate target of 1000, and once it sustains above the zone of 1000, then it has the potential to retouch the lifetime high zone. But overall, my target has been achieved, so I will be making a calm position for IRCTC. Overall, IRFC is also looking positive to me, so I'm expecting this counter can see a good surge in the coming period. Near about 146, 148 is the resistance zone for it is consolidating near the resistance zone. But the time it breaches the 148 levels, then I can expect a kind of move that IRCTC has seen. So I'm expecting near about 158 to 60 kind of a target for IRFC.
Okay, so that's as far as the railway stocks are concerned. More the IRCTC you'd like to wait, but IRFC is what you're looking at. Right, just about 4 minutes or to go before the market shut shop. Let's start preparing for tomorrow. Then, Osho, how would you advise the strategy for investors tomorrow on the benchmark indices, sectorally, and even stocks, if you can talk about?
See, specifically for benchmark, it is again, matlab, we are witnessing a very small bodied candle formation for Nifty. So this means that market is hesitant to move from here onwards. So again, 22,500 should be acting as a very strong resistance zone. So one should not be very much aggressive in Nifty for the time being. Whereas for Bank Nifty, I am expecting a good move. If there will be any dip towards 47,250 to 300 on spot levels, that will be a very attractive levels to buy Bank Nifty for immediate target of 47,800 to 48,000. So Bank Nifty is having comparatively is having a strong setup as compared to Nifty. Now for a stock specific, there can be strong movement that can be seen across board because mid cap, small cap, all the counters, broader market has started participating in a very decent manner. So there will be a strong up move that can be seen in the coming period. So my approach for this market is to wait for some kind of dip, and one should be aggressive on the long side. Not do not go against the market and have a short view in the for the time being.
Okay, well, fair enough. Well, thanks a lot, Osho, for being with us on the show. And as we begin to close the show, we're again seeing some green ticks emerge on the Nifty, giving us a hope that probably tomorrow could be a better day for the markets as far as the benchmark index is concerned, because both the Nifty as well as the Nifty Bank have come off the day's low point, and they're trying to eke out some gains towards the end of the session as well. 22,469 currently on the Nifty. That's just about 6 odd points higher in trade, but the good part is it's coming off the low point. It's now into the green as well. So the top stocks to watch out right now on the Nifty: Tata Consumer Products tops the charts, 4% higher. M&M 3% up move can be seen on this one. BPCL is up by 2.5%. Bajaj Auto, Adani Ports, Divis Laboratories, Tata Motors and Nestle are the stocks that have been buzzing as far as the Nifty on the up move is concerned. On the downside, however, as far as the Nifty is concerned, Hero Moto is dragging, Kotak Mahindra Bank, you have HCL Technologies, TCS, SBI Life, ICICI Bank. These were the big laggards as far as the Nifty is concerned. Sectorally, the action was largely positive, with consumer durables topping the charts, metals following, oil and gas again, so commodity-based sectors and the broader markets doing well as well. IT healthcare stayed on the back foot in today's trading session. The top movers as far as the F&O action is concerned: Aditya Birla Fashion and Retail, Z Entertainment, Laurus Labs, JSPL, Steel Authority. These were the top stocks that were abuzz as far as the F&O action is concerned on the markets right now. As far as the big broader markets are concerned, NSE 500, you do see many stocks that were actually doing very well in trade, many of them in double-digit returns as well. Epigral was up and about in trade today. Sigachi Industries was up and about. Centrum Capital was up and about again in trade today. You also have TCNS Clothing that was about 39 rupees, kind of a move that we saw on this one. A very strong move, double-digit gains on this one. Tanla Platforms, of course, Aditya Birla Capital moved on tow with the other peer as well from the same family. Surana Solar also moved up in trade as well. Many of these stocks really showed you some sharp moves in trade. trade as well. So turned out to be, narrow band of trade, but many stocks from the mid and the small cap basket that continue to move up higher. We will tell you what to really look forward to as far as the markets are concerned, even going beyond this. Stay with us on Business Today TV as conversations will follow from the world of business and stock markets on the other side. Until then, many thanks for joining us on to the closing trades as far as Market Today is concerned.
Rampur is famous for its knives or chakus.